Hi everyone, I am Arib. I'm currently a junior at the American International School of Dhaka. And for those of you who don't know, I'm from Bangladesh. I grew up in the bustling megacity of Dhaka, where you can't go a single second without hearing the sound of a honk, where it can take hours just to travel a few kilometers, and where the roads are a real-life battleground between vehicles of all sorts. But more importantly, I grew up in a country of 170 million people. And through an independent study that I conducted, I figured that the fate of my people, keep in mind 170 million people we're talking about here, depends on a country called the United States of America. A country where I can bet money on most of its citizens don't even know what or where Bangladesh even is. So with that being said, that's essentially what my TED Talk today is all about. It's about the impact of America, one of the world's largest superpower, on an emerging country like Bangladesh. Particularly, I will be looking at the impact of US interest rates on the Bangladeshi stock market. So at first, I'll admit that my idea seems far-fetched. How could the economic tides of the US possibly shake the shores of Bangladesh? I mean, separated by nearly 13,000 kilometers, a grueling 21-hour journey by air, and worlds apart in culture, Bangladesh and the US appear to have practically nothing in common. Yet beneath the surface, invisible layers of global finance and economics binds us together in a weirdly intricate way, in which the US interest rates indeed impacts the Bangladeshi stock market. So when I say the word stock market, what comes to your mind? Yes, Wolf of Wall Street. Wolf of Wall Street is probably one of the first things that comes to your mind when I say the word stock market. I mean, you wouldn't be wrong. The movie is just a classic. However, the Bangladeshi stock market couldn't be any more different from the cutthroat corporate world depicted in the film. I mean, there's no flashy traders yelling over the phone at the Dhaka Stock Exchange, and there's definitely no billion-dollar deals being made in seconds. So in a way, the stock market in my country is very, very unique. And I'll tell you why. But before that, I would like to give you a brief history about the stock market in Bangladesh. So the stock market in my country was, as you can see, first established in 1954, when we were still part of the Islamic Republic of Pakistan. Back then, it was called the East Pakistan Stock Exchange Limited. Moving forward 20 years, in 1971, we had our liberation war, in which we prevailed and became an independent sovereign nation. However, the happiness didn't last long. Immediately after winning the liberation war, my country was hit with a brutal famine that killed hundreds and millions of people. The economy was hit hard, so hard that the stock market was suspended for nearly half a decade. That's a lot of time that we are talking about here. However, through the resilience of my people, the stock market did open in 1976, and it has been in operations ever since then. Now, just to provide some historical context of how old stock markets go back to, the first stock market in the world, and this is of course disputed by some historians, but let's assume, the first stock market in the world was created in 1602 in the Dutch capital of Amsterdam. So compared to the first stock market that was ever created in the world, the stock market in Bangladesh is basically a baby. It's an infant. So in a way, that makes us very unique. We are young, we are new, and we are filled with potential. However, at the same time, it shouldn't dissuade you from thinking that since we are so young, since we are so new, that we are inexperienced, or the stock market in Bangladesh has no potential. I mean, the stock market in Bangladesh is actually set up for success. Not to brag here, but Bangladesh has the 7th largest labor force in the world. That comprises of 74 million individuals. That means Bangladesh has 74 million people, 74 million active Bangladeshis working daily and contributing to our economy. Our labor force is greater than some countries' population, for example, Thailand or even the United Kingdom. Not only that, Bangladesh has been identified by Goldman Sachs, which is arguably one of the most successful investment banks in the world, to be one of the next 11 countries. So what is the next 11 countries? Next 11 countries are basically a list of 11 countries that Goldman Sachs, keep in mind one of the world's largest investment and successful banks, has identified to be a potential trillion-dollar economy in the coming decades. These are some promising stats. Tying it back to the stock market, 70% of our retail investors in Bangladesh are under the age of 45. So why is this number important? It's important because younger people are more willing to take risk and more willing to invest in the stock market. That's good news for us. Tying that back to economics, 3% is the annual savings rate of Bangladesh. So what does this mean? It means that Bangladeshi stock market has a relatively young investors who are willing to take risk and invest in the market. And not only that, these people have some level of capital to invest with. So our stats are basically perfect. However, all that glitters is not gold. I won't lie to you guys. Even though our stats seem perfect, the Bangladeshi stock market is not without its flaws. So one of the flaws that I would like to mention, and you guys will probably see it in a minute, is that Bangladesh only has 2 million registered stock accounts, around 2.5 million. This might seem like a lot, but in a country of 170 million people, that's not enough. It means that people are not really engaging with the stock market. Additionally, the stock market in Bangladesh has not been without its controversies. In 1996, there was a massive scandal in which fake stock certificates were being sold to the public. So in the stock market, what happens is that when you buy a stock, you're essentially buying a piece of that company. For example, if I buy one stock or one share of Apple, I'm essentially owning 1% of that company. But what happened in Bangladesh was, back in 96, fake stock certificates were being sold. So people bought imaginary, fictitious companies that weren't existing in real life. This caused a massive scandal. Moving forward 15 years, the situation didn't change much. In 2011, the Bangladesh Central Bank, which is the official bank of Bangladesh, found out that 60 affluent businessmen were manipulating the stock market. This includes all the traditional illegal activities that you can think of. For example, collusion, insider trading, and manipulating the stock prices. So clearly Bangladesh has domestic shortcomings, and I can see why some of you at the audience here are probably thinking that I'm trying to stir up a conspiracy theory. But hold on for a moment, because in the next subsequent slides, I will provide some really crucial data that will put all the puzzle pieces together. So in the independent study that I conducted, I looked at the Dhaka Stock Exchange Index points against the US interest rates. Dhaka Stock Exchange Index points might sound complicated, but it really isn't. What it basically is that it shows the level of activity in the market, how many people are investing in the market, and if the investors have trust in the market. So if the Dhaka Stock Exchange points are up, then it's a good sign, because it means that investors have some level of trust in the market. And we all know what the US interest rates is, so I won't delve into that. So through the 10-year period that I analyzed, I figured that whenever the US interest rates goes up, the stock market points in my countries goes down. Clearly, something is going on here. However, it could very well be a coincidence. So I needed more tangible, more data to provide evidence to my theory. That's when I turned to economics. I looked at 3 macroeconomic indicators: FDI, exchange rate, and the inflation rate of Bangladesh. I looked at how changes in the US interest rates affects these 3 macroeconomic indicators of Bangladesh. I will admit that these 3 macroeconomic indicators might sound confusing or convoluted to some extent, so I will explain it in the most simplistic manner that I can. The exchange rate is basically what you see in the exchanges in your city, or what you see in the news. For example, $1 equals to, let's say, 130 Dhaka. That's what you see on the news. That's what exchange rate is. But exchange rate is a very important economic concept, and I'll tell you why. Let's say 130 Dhaka cost $1. So for an American, Dhaka is going to be very cheap. So what will they do? Naturally, they will buy Bangladeshi products, because our products are extremely cheap. So Bangladesh will export our products to the United States because our products are cheap for Americans to buy. So that's essentially what exchange rate is. The lower the value of our currency, the higher the export rate is going to be, and vice versa. On the other hand, FDI stands for foreign direct investment. Foreign direct investment basically shows how much money our foreign investors are putting in your country. It's a sign of economic development because foreign countries see potential in your domestic country. And lastly, inflation rate. Inflation rate, I can bet money on, impacts all of our lives, yet most of us don't even know what that means. We see it on the news, but we don't know what inflation rate is. Inflation rate basically shows what is the value of your currency. Let's say I have 100 Dhaka today. If the inflation rate rises for, let's say 10% in 1 year, that same 100 Dhaka is now going to be valued at 90 Dhaka. So I'm losing 10% of the value of my currency. That's essentially what inflation rate is. It impacts the purchasing power of the consumer's needs and demands. So I looked at these three macroeconomic indicators and the Dhaka Stock Exchange points against the US interest rates, and I graphed them. The graph is probably sounds very complicated, but what I did was I basically graphed the X and Y variable, and I looked at the correlation coefficient. For many of you who are high schoolers here, you might know what correlation coefficient is, but if you don't, I'll explain it. Correlation coefficient basically goes from 0 to 1. The higher the correlation coefficient, the stronger the variable. And I looked at the correlation coefficient between the US interest rates and these three macroeconomic indicators and the Dhaka Stock Exchange points. And I came to an interesting revelation. I mean, let's look at the BDT USD exchange rate. It shows that whenever the US interest rate goes up or down, 0.98 is the correlation coefficient. So there's a 98% chance that the Bangladeshi exchange rate is going to be impacted. That's a lot. That's a lot. Now, I also looked at the FDI, or the foreign direct investment, and that was around 0.92. That's still very high, which once again goes on to show that changes in the US interest rates impacts the FDI around at a rate of 92%. I also looked at the Dhaka Stock Exchange points, but that was around 80%, which means, yes, the US interest rates indeed impacts the stock market, but not to a great extent, let's say to a medium extent. And for the inflation rate, it was only around 0.3. So inflation rate is the only factor that I figured out was solely impacted by domestic issues, because it's the Bangladeshi government who is deciding the inflation rates. So I've established a cause and effect relationship that, yes, the US interest rates indeed impacts the Bangladeshi stock market. So what's in it for you guys? What does this information tell you guys? Well, it actually doesn't tell anything. No, I saw that some of you guys, some of your jaws drop, but obviously I was joking. Yes, it does tell you something. It tells you, and I want all of the audience here to realize this. Bangladesh and US are separated by millions of miles of oceans and land and continents, yet changes in the US interest rate affects an emerging market like Bangladesh, which is situated thousands of kilometers away. So one takeaway that I want all of you guys to learn from this is that seemingly insignificant things in our lives, whether it be economics, whether it be finance, or whether it be in our day-to-day lives, all of it sort of has a ripple effect. It has a domino effect. It can accumulate up and it can impact our day-to-day lives. So clearly, seemingly insignificant stuff has an impact on our day-to-day life, and I want all of you guys at the audience to take away that, and that's a lesson that I wish I have conveyed in a eloquent manner. So that is it for today. I am Arib Malik, and I hope that all of you guys learned something important today.